AMC stock is about to go crazy, ladies and gentlemen. Go ahead, mark my words, save this video, mark your damn calendars for all I care. AMC stock is about to make some pretty big moves here. Look at the cost to borrow rates that are exploding today. These are some cost to borrow rates that we have not seen in a very long time. This cost to borrow max is sitting at 48.06%. The cost to borrow average is 25.84%, and now the cost to borrow minimum is 11.66%. For context, last time we talked about the cost to borrow rates was probably about a week ago when the cost to borrow max went to 20%, which is high, very, very high on normal standards, but we have over doubled in the past week on the cost to borrow max, cost to borrow average, and the cost to borrow minimum. So what is this telling us? Well, simply put, when we connect the dots here, cost to borrow is essentially saying, hey, if you owned AMC stock, yes, you that are watching this video, how much interest would you want to lend out your stock? Well, if you thought the stock was going to move, call it 30 or 20 to 50%, well, you're going to charge a cost to borrow rate somewhere in that range, right? 25 or almost 26% for the average, 48% for the maximum. So that is implying an even bigger move that is to come, and I do think the executive order here is having a pretty big impact. Now, there's a lot of other things we do need to talk about, like the option activity, the technical analysis, all of that good stuff, which we're going to dive into in 1 second, and we do have some big catalysts for the rest of this week. But before we get into that, the official sponsor of this video is me. If you guys want to get access to all of my trades in real time, link down below in the pinned comment. Thank you guys for doing that and supporting the channel. We will have the nightly live streams a little bit earlier tonight, in between 9 and 10 p.m. because I do have some things that I have to do early in the morning tomorrow that I need to obviously get some sleep for some real estate stuff. So we will have that a little bit earlier in the evening time tonight. Come join us. Make sure to get your free stock as well. In the meantime, with Weeble, Mumu, and Public, thank you guys for doing that. Now let's get into the rest of this information. So the short interest of free float has been going up, but really what has been going up even more is the free float out on loan. So we're seeing a lot of borrowed shares each and every single day still, and that is adding to the free flow out on loan, which currently sits at 35.63%. Now, essentially what this is, you could go ahead and take the free flow out on loan and minus that by the short interest, and that'll give you the amount of, or percentage of the float that is essentially out on loan that can be sold short, but that has not actually been sold short. Yeah, and that would be about 12% of the float, so roughly 120 million shares potentially that could, no, actually that's like 50, 60 something, right? My math was a little bit off right there, but nonetheless, a lot of shares that could potentially be used against us, but that could also be a very bullish thing if those shares start to actually be returned. That could start to affect things like the cost to borrow rate, things like, you know, the days out on loan, all of that. And you guys can see the average days out on loan is very, very high as of right now. We go ahead and pull that up. You're looking at like 83 days out on loan. So odds are a lot of these short positions are positive, but when you start to see a move to the upside, when things do start to get explosive, which I think there's no doubt in my mind that it will, that's going to put a lot of pressure on these hedge funds to cover on their short positions, potentially in a very short amount of time, because when you're losing in your overall portfolios, you're winning on your short positions, which are very concentrated in stocks like AMC, GameStop, Redbox, DraftKings, Affirm, SoFi, right? These stocks that have over 20% short interest. It's not the large stocks. It's not the core holdings in people's portfolios that they're shorting. They're shorting these very risky stocks. So even when the markets do bounce back, or you do see a recovery in these kind of stocks, you know, and even in the markets do well, these stocks are going to well outperform, and that's going to overall hurt these hedge funds portfolios. So either way it goes, I think you're really primed with these market conditions to see big rallies in share prices of stocks. You can see Redbox. I do want to make a video about this later on today. That thing is up about 17% today after rallying about 27.61% yesterday, sitting at $10 per share. Also has very high short interest numbers, very high cost to borrow rates, and look what happened with that thing. When the cost to borrow rate started to jump, the stock started to jump as well. So I think that can be somewhat of a leading indicator. And, mixing in the executive order, everything else that we know going on, or even like Gary Gensler talking about basically changing the plumbing of how orders are actually filled and executed, I think all of that puts some pressure on those short positions nonetheless. Now let's talk about what is actually going on in the marketplace today, because the S&P is down about 1.10%, the Nasdaq down 0.78%, Russell 2000 taking the biggest beating by far, down about 1.75%, and the Dow Jones down about 0.83%. Now, what's going on today? When you boil it down, it's the bond market. Bonds, 10-year treasuries are up 0.05 basis points today. So the bond rate is now over 3%, 3.02%. And anytime it's over 3%, you're probably going to get a lot of people that start to freak out a little bit. At the same time, you have oil going up again. Now the price of oil is in the mid 120s for 1 barrel of oil. And you guys have seen what, the price of gas has been doing at the gas pump to your bank accounts, or to other people's bank accounts, especially if you're a lower income earner and you drive far to work. That's seriously hurting in a major way. And there's a lot of concerns on Wall Street right now that we are heading into a recession because of food and energy. For the most part, CPI, I think it's safe to say that doesn't matter as much, the other things. But when you have to fill up for gas once, twice, 3 times a week, and it's costing you 2-3 times as much as it used to, and when you got to go to the grocery store probably once a week and that's costing you like double what it used to, that's what is pushing us into recession. It's not the other things in CPI. So I think we're in a really weird place here in the markets just overall, where we're balancing between, the Fed's trying not to kill all demand, which they are killing demand. Look at this, mortgage demand falls to lowest level in 22 years amid rising rates and slowing home sales. That's not good. That's not good. When real estate starts to take a hit, not good. But the Fed, at the same time, they're just trying to get rates up, so when a recession comes, they can drop rates and essentially accommodate the markets. But if we start to slow down, exponentially faster than the Fed can raise rates, and we start to go into a recession, then we could be in a recession as the Fed is still raising rates, and that's like a very, very bad overall situation. So the markets are definitely freaking out about that, and I think they will continue to freak out about that just because of the situation we're in. We've never been at a less than 1% federal funds rate, slipping into recession. At the same time, the Fed has to get rates up, and we've had have super high inflation. We've never had this in history. Same time, the Fed is doing quantitative tightening. So there's a lot of things that the markets are contending with, and that's why you're just going to see these back and forth, positive days, substantially positive days, and then substantially negative days. And I'm surprised today is not even worse, but I think we still have a lot of pain ahead of us when it comes down to it. That is ultimately a good thing for AMC, though. So that is really what's going on as far as economic data for Friday, which is not tomorrow, but the day after tomorrow. We do have the CPI report that comes out and the Michigan Consumer Sentiment Survey that comes out, and those are going to be the 2 most important things for this week, and I think that could cause a little bit more of that downside pressure over the next 2 trading days or so, kind of like we're seeing today, just because the markets have bounced up substantially since we did have this massive amount of fear back here, and that was around May 20th. We did hit 380 on the SPY. We're now 31, almost $32 higher on the S&P. So I do think this potential catalyst, CPI on Friday, could be a big fear catalyst to send the markets down a little bit more. It's like one of those things, you want to play the opposite game here, right? If you rally into a potential fear catalyst, then you're more than likely going to drop. If you fall into a potential fear catalyst, you're more than likely going to rally. So that's a quick little golden nugget for all my traders out there. I do have some bearish positions on the S&P as well as the QQQ, and some bullish positions on AMC as of right now. So I do have my money where my mouth is in regards to this. Like I said, if you want access to all of that, link down below in the pinned comment. Now let's go ahead and take a look at the option activity for AMC stock for the day. I gotta do all this. Oh my gosh. Yeah, Ortex just kept declining my card. All right, we're done with that. Let's go ahead and look at the option activity, and we can see for the day, you're looking at positive order value of 8%, 29 orders totaling $7.7 million. Lots of bearish activity that we're seeing today. I think this is a desperate attempt to try to keep AMC stock down via these put options, because when they're buying these puts that don't have a lot of time left, that are kind of close to the money, then that could put a lot of downside pressure on AMC stock, and that can kind of counteract some of the call it bullish pressure that we might be seeing. And there's a lot of put activity that is happening. You guys can see some of these orders are for millions of dollars, about $3 million right there in 2 orders. $628,000 right there in a bearish order, 436,000 in a bearish order, 367,000, 366,000 in a single order, 363,000, 362,000, 360,000, 250,000, 1.31 million, 1.32 million, couple $100,000 orders right there, $1.03 million put order. So a lot of artificial puts, and this adds to the potential to see a major reversal, right? If tomorrow is, very bullish, or even Friday for that matter with the AMC stock, then, that can be a lot of potential de-hedging the market makers have to do, and that can push us up quite substantially in the share price of AMC. So that's the way that I kind of like to look at that. We'll see what happens. The max pain does certainly support AMC going through a bit of a rally here, at least by next Friday. The max pain is sitting at $18 by June 17th. The max pain for this Friday sitting at $12.50 per share, so roughly where we are at right now. Now, if we go ahead and take a look at the technicals, we could see we're setting up a pretty decent looking trend line from these levels that we just hit May 24th and May 25th. If we go ahead and pull up the trend line like that, you could see, you could also go ahead and drag this down to what we've seen down here, hitting just slightly under $10 per share. So you're setting up with a decent little trend line right there. Obviously, if that's the case, we want to see the stock make its way back up, hopefully break out above the 50 and 100-day moving averages, and then it'll ultimately probably come back down to this range in the 14-15s to establish that overall trend line with 3 connecting lows. And that's going to be a very, very bullish. Something along the same lines as what we're seeing with Redbox right now is kind of what I'm expecting. So you just get that beautiful trend line, and then you do get that little gap up like we've seen over the past 2 days with Redbox. Redbox also looks very good, so I will be making a video on them later on throughout the evening, so make sure you guys pay attention to that. I think there's a lot of opportunity that is still involved in that trade. So that is pretty much going to be all for this video. All in all, I am very, very bullish. I'm still sticking with my price target. I still expect a big move. I'm not going to be like the analysts that come out and revise it down, but if you wanted to be a little bit conservative here, I would say in between the 50-day moving average at $15.84 and about $18 is a reasonable level. If we can break out above those moving averages, close out the week there, I think that could be very, very bullish. And it looks like AMC is just stuck at 3.6%. It's like not moving around at all really right now. So that is pretty much going to be all for this video. Let me know your thoughts on this. Let me know your thoughts on the cost to borrow rates that are exploding. Do you think this is a sign that AMC stock is also about to explode to the upside? I personally do. That's what history has showed us. But that is going to be all for this video. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public. And like I said, if you guys want to trade with me live in real time, link down below in the pinned comment for that one. You guys enjoy the rest of your day. I will see you in the next one.